Good day. I'm Martin Gago with Market Radius Research. It's Thursday, July the 7th. We've got Johan Arnet, CEO of Turnium Technology, joining us. Turnium is a provider of SD-WAN, or software-defined wide area networking solutions and software. It's great to have Turnium join us today. I always love having new listings join us, as it gives us an opportunity to see and understand a story before it's often widely known. As well, this is a true hardcore tech story, which are my favorites. The SD-WAN space is one that most people haven't heard of, so I'm looking forward to understanding the tech and the market opportunities. I first met Turnium several years ago as a Priveco, and it's great to see they've progressed from startup with a promising technology to a pubco with traction and a strong, experienced board of directors. But please remember, this is neither a recommendation nor investment advice. We're here to learn about the company. John, thank you very much for taking the time to talk with us today. And let's hand it off to you, and you can start telling us about Turnium.
Great. Thanks, Martin. I really appreciate the opportunity to be with you and everyone today. I'll run everybody through our sort of information deck, and hopefully that'll generate some good conversation and answer some questions. So without further ado, obviously we have, well, it actually advances. Well, there we go. There's some disclaimers, we'll skip those. Turnium is a relatively seasoned software-defined wide area networking vendor. We've been around for the better part of a decade. We were doing SD-WANs as long before SD-WAN was a thing. Our friends at VeloCloud and Viptela nicely spent a few hundred or a few $1 million, $250 million, defining a category for us in 2015. And since that time, we've had a lot less educational requirement of our clients. We've been focused on the small to medium enterprise space as a SaaS business. We've got thousands of customers around the world already. And as Martin said, we've just recently completed our public listing on the Toronto Stock Exchange on their venture board. We completed a $3.3 million financing in what many of our bankers have said are some of the worst markets in recent history, which is no small feat. We as a business have concentrated quite a bit on our relationships with OpenShift, with Red Hat and their OpenShift platform, with IBM, and working with Kubernetes and a number of other sort of major partners. And we work not only on traditional telco infrastructure and bare metal hardware, but we also run in AWS, Azure, Google Cloud, etc. We've got a pretty good management team that we've managed to put together. I'm really fortunate to have such a great group of people working with me. It certainly makes my job a lot easier. Recently, we added Juliette Jones as our CFO. We have Haresh Kiskani, who is our CTO, who comes to us from Cisco. Jeff Halton has been with us for over 5 years, used to be in charge of sales and marketing and has moved exclusively to our chief marketing officer role at this point. Colin Atkinson has been with us for a number of years, and Andrea Pervain. John Wigboldus, there was a press release that went out today actually recognizing his appointment to chief revenue officer. He comes to us from a number of quite significant SaaS companies like Counterpath. And Logan Campbell has been with us for a number of years. In terms of a board, we've got Derek Spratt, who's been a chair with me for the last 4 years or so. We've recently added Evelyn Bailey and Peter Green as directors, who come to us as independents. Evelyn was with IBM and recently made the move to Kyndryl as they split off from IBM, and she's in charge of the Scotiabank portfolio there. Peter Green was the ex-head of TELUS Professional Services, or TELUS Business Solutions, and is now CEO at Airbeam Technologies. Ralph Garcia is on our board and is also director of Verge. And Jim Lovey was the ex-EVP sales at Rogers Communications. So it's a really strong board that allows me to actually have some very meaningful discussions with a board of actual industry experts that can help sort of guide the company as we move forward through, starting to actually have finances where we can grow and really accelerate the growth of the business, which is what going public was all about. The SD-WAN market as a whole is an exploding marketplace. We started about 3 years ago really tracking all of this, and 3 years ago the anticipated 5-year run rate was $5 billion. Well, we're 3 years out, We're already at $5 billion, and we're tracking in the next five years to be well over $30 billion. That is astronomical growth. And the neatest thing about that for us is there is no real dominant player in the market. Yes, there are some gorillas. Nobody would argue that Cisco with their Viptela product line, or VeloCloud, or Versa are small players. They're not, but there's no reason that Turnium couldn't achieve a 3 to 5% market share, which would put us well over $1 billion in annual revenue, right? I mean, those are achievable real numbers. Enterprises are growing. 5 years ago, if I went to an enterprise and said, "Hey, you should put an SD-WAN in," they'd look at you cross-eyed and think you were crazy. Now you go into an enterprise and it's like, how quickly can you put an SD-WAN in? Because we realize it is the way networking is going to work in the future. Our partners at IBM with their Red Hat portfolio have gone leaps and bounds into the SD-WAN direction, realizing that the legacy MPLS and traditional telco networks are no longer capable of delivering the services that they need to offer their customers.
John, could you step back a bit and maybe just give us a bit of a primer on what is SD-WAN and like its use in enterprises, and how they use it?
Sure, of course. So SD-WAN, I mean, it is literally what its title says, right? Software-defined wide area networking. So in the past, legacy wide area networks were typically using a technology called MPLS. Large carriers, telcos would deliver MPLS to their customers. It was admittedly incredibly reliable. However, with that reliability came an incredible lack of flexibility and very, very high cost, especially in the North American markets. The European markets did manage to drive the cost of MPLS down. The other part of it is it typically took 4 to 8 weeks at a minimum to deliver an MPLS circuit to a customer. So if you're a regional operator and you have a customer and they call you up and they say, "Hey, we need to move offices." "Oh, great. When are you moving?" "Well, next Tuesday." There was no chance, right? Your MPLS, like, you were just not going to have network at that site when they moved. The best part about SD-WAN is if you have any form of network connectivity at the site, and by any, I mean 5G, satellite, LTE, cable, DSL, fiber, it doesn't matter. Any form of connectivity, you put the SD-WAN appliance behind that connection, turn it on, it joins up to the cloud, creates its virtual, secure, and private tunnels, and you're running. And the neat thing with our technology that's particularly powerful is we have really, really good link aggregation. So we can take carrier 1, carrier 2, and carrier 3. We can stitch those connections together and provide you an aggregate of those connections. And we lose about 5% to the physics or the overhead of combining those connections. And that's super powerful, right? Because if you're doing something and you're running an office and all of a sudden carrier 2 drops out, you'll never know it with our solution. That carrier just drops out. The solution recognized there was a problem with that leg. It simply removed it from the bundle or from the technology. And later, when that comes back up, the system will just put it back once it tests and believes that that circuit's okay again. Of course, in the background, it's alerted on network operations. It's done all the things you would expect an intelligent solution to do. And by the way, if you were running a voice call or if you're running a data stream or a video call like this over the solution, the QoS engine would be protecting all of that, and you'd never even know it went down. We're really proud that our technology detects those kind of failures in sub 300 milliseconds, which is blinking speed kind of thing. So it's really good tech from that perspective.
All right, I'm going to try to simplify this a little bit more. So sure. I'm running a company with several branch offices. We've got at head office, we've got our network where our different clients and our internet and our applications are running off of. We open up a branch office in Moose Jaw, and then they want to be connected to the same network infrastructure and have the same applications. So previously, you'd actually have to get a circuit installed at the telco over their data connection that sort of connected in. Now with this, you put in like a basic generic box, have your software installed on it, and then through encrypted sort of tunnels or whatever, the branch office is then connected to the head office. you've got all that security where no one can sort of hack in on your stuff, and the branch office suddenly has all the applications, and the network guys at head office can control what's going on there. And you mentioned different providers. So you get two data providers, you rely on one, but if that fails, then your software then switches over and says, okay, go to TELUS or Rogers or whatever the other provider is to make sure that we're always up. Did I nail that?
Yeah, that's essentially correct. One of the things that I will say is rather than just relying on one and switching to the other, one of the neat things about our tech is we actually use both all the time.
All right.
So rather than having a connection sitting there idle doing nothing and paying for it, we'll use them both. And then if one breaks, we just take that out of the solution. So as long as you have one running, you're good. But if you have more than one, we'll just give you all that bandwidth all the time.
You get twice the bandwidth, so to speak, and you've got a fail safe then.
Yeah, exactly. That's right.
All right. Okay.
And it's also like constant real-time testing of your backup circuit, right? You're always using it, so you know your backup is good. I mean, how many times have we all thought that we've had a backup and we go to check it, and it's like, oh, the backup's dead and nobody looked at it for the last 6 months, so we're actually in real trouble, right? In our case, the backup's tested every minute of every day.
Yeah.
Right. So it's great. And
while your software isn't like technically, I probably wouldn't fall directly under the realm of like cybersecurity. It is inherent. It provides that with an encrypted line and so forth. Is that right?
Right. So there's a number of security features with a product like an SD-WAN platform, and certainly with ours. For example, the per packet load balancing allows traffic, or in fact enforces traffic, to go down multiple paths simultaneously. Meaning, if you numbered packets 1 and 2, and they were all running down a pipe 1 2 1 2 1 2, half of them are going to go down pipe 1, half of them are going to go down pipe 2, and then they're reassembled at the other end. So if a bad actor were to intercept one of the streams on one of the pipes, and then we're able to decrypt that stream, they would still only have half the data. Right? So there's an inherent level of security. In terms of the actual encryption, we run any number of different security ciphers. The really standard ones are 128 or 256-bit AES, for which Intel provides some acceleration. But our encryption system is modular. So if a customer came to us and said, actually, I've got this really weird requirement for this odd cipher that you've never heard of, but here it is, because we're modular, we can actually implement that cipher for them and put it into play. So we're quite flexible in that regard.
You are software defined, but do you sell hardware at all, or is it just you maybe sell it as part of the bundle, but you're not hardware engineers? You guys are software engineers,
right? As a company, we are not a hardware provider. Now, I won't say that we don't sell hardware. That would be disingenuous. We certainly have customers that come to us and say, "Hey, we want a whole solution," and of course, we sell hardware. We're partners with Lanner Electronics. We're partners with a number of other what we call CPE, or customer premise equipment vendors. We put our software on that hardware and we'll put it into play. Turnium focuses its technology, however, more into the hands of channel partners that are able to implement the software themselves. So we think of us as a technology wholesaler. We sell the software to enablement partners like ITEL Networks or BCom. Most of the people in the middle sort of bank on this slide, although IBM and Red Hat can certainly do the same thing. And they take our technology and they bundle it in with their own hardware, their own data centers, their own offerings, and they offer it directly as a white labeled solution. So that's why in a lot of cases, you don't see the Turnium name popping up nearly as often as you might VeloCloud, who provide a whole bundle and you really can't white label it, right? It's just you have a VeloCloud solution resold by whoever, TELUS, I don't know, take your pick.
Okay, so as a business, I go to, I know I'm looking at the channel partners here, ITEL, and I say, hey, I need a software-defined WAN solution, or I have a problem, and they say, hey, you should do an SD-WAN solution. Here's our package, and it happens to include the Turnium SD-WAN part of it, and the client doesn't really know. They just say, hey, this is a great solution, presumably.
Right. I mean, if you think about a service provider and their typical offering, right, you go to any internet service provider. Let's pick on Shaw Cable for a minute. They're a pretty good company. I like them. You go to Shaw, they don't say to you, well, we're going to give you an Eris modem, right? You don't know or care what the modem is. They just provide you an internet connection. And the same holds true with our software. If you go to a customer like ITEL, a customer of ours, and you say, hey, I'd like an SD-WAN solution, They say, great, here you go. They don't say, here's the Turnium SD-WAN solution. They just say, here's our SD-WAN solution. So it's white labeled to them. Yeah, that's right.
Okay.
Yeah, pretty straightforward. So, you know, a lot of the reason Turnium exists the way it does today is because we want it to be different than our competitors in the space. So if you want a fully bundled, fully integrated, end-to-end, every bell and whistle solution out there, maybe one of my partners is offering that using our technology, but we don't sell that. We sell what's called a pure play disaggregated SD-WAN solution. And the reason our partners use us is because we don't tell them how to do the other parts of their business. They already know how to do. I'm pretty sure most internet service providers know how to sell you a managed firewall, and they have their vendor of choice. That could be FortiGate, that could be Palo Alto, that could be Sophos. It doesn't really matter who that is. They have a partnership and a relationship there. But what none of those vendors have is a particularly good SD-WAN platform. At least they didn't when we started, some do. And so we're really easy to use. We're easy to integrate. We're easy to deliver. We're cost competitive, right? We don't force you to buy a bunch of things you're not going to use as either a vendor or an end client. And we're really, really scalable, right? It's really easy for us to do, you know, multi-thousand node deployments and deliver those deployments, you know, reliably with those customers. So it's quite important for us. You know, we touched on this a minute ago, sort of how we sell. Most of our business, 80% of it is white label, right? So super high margin, right? On a white label solution, we're running 92% margins, right? Can't be unhappy with software that's delivering 92% margin. It's pretty good. In that environment, we have a very strict selling criteria. If you want to be one of those partners, you have to have your own data centers, your own networks, your own support staff, et cetera, et cetera. But that doesn't fit everybody. We do have a lot of customers, you know, and I think the ratio right now is something like 1 to 100. For every qualified white label OEM or wholesale partner, we find 100 that aren't qualified. And so rather than leave those people with nowhere to go with the Turnium technology, we've basically built an incubation program where we offer lit services until such time as that partner is big enough to go out on their own, and then we incubate them across into running their own network or introduce them to one of our existing partners that can sort of continue to help their evolution and growth. So we're really proud of having this sort of two-tiered approach that allows us to deliver services in sort of whatever genre is necessary to help our partners and customers deliver to their partners and customers.
So, sorry, going back to the managed SD-WAN services, that is, you have a reseller. They don't have a sort of complete solution where they can just drop in the software. You provide like the data feed, like.
Yeah, so we have data centers in 5 centers around North America. We only offer this service in North America today. We have 5 data centers that we offer services from. It takes us about 2 to 3 weeks to spin up a new data center if there was a need in a particular region. But the 5 we've got are pretty central. I take that back, there are 6 now, pardon me. And so what we would do is, let's say you're a voice over IP service provider. Doesn't really matter which one. You sell a lot of VoIP. You've got a data center for your VoIP stuff, but really you're not network engineers. You're a specific product set, subject matter expert, and you don't have the bandwidth, technical capability, the staff, doesn't matter what, to deliver an SD-WAN solution. But you certainly see the value an SD-WAN solution brings to your customers. Quality of service, the ability to have resilient uptime, multiple connections, automatic failover, all of those things. You say, hey, this is something I want my customers to have and to buy. And so we provide that engineered and delivered solution to those customers. And we'll either sell to the partner or we'll sell direct to the customer as the partner wants on a case-by-case basis.
All right. So on the white label solution, I presume it's a SaaS model as well. You don't just send like a one-time, whatever, $100,000.
Monthly SaaS.
Monthly SaaS. And that is like you kind of price it on how many features and how many nodes or something like that are on the are being used,
it's
or
based
how
on
many
sites.
servers it's dropped into, something like that.
It's based on sites. So if you're let's say you're just a reseller, you sell VoIP services and you're selling to a car dealership that has 5 locations.
Yeah.
You want to put in 5 SD-WAN endpoints, so 5 times X per month, and you've got your pricing.
Gotcha. Can you give me, not to get competitive advantage or anything, but just ballpark, what would the price per location? Is it like $10, $100, $1,000 a month? Like just ballpark?
So it's a little complicated in that, are we including the internet feeds with the price? Are we not including the internet feeds? The raw service alone starts at about $70 US per month per site.
Okay.
Volume discounts could drive that down. Bandwidth or specific technical requirements could raise that price. It really depends.
All right. And then presumably the SD-WAN services are at a higher price because there's more stuff bundled into that. You're offering a full service, and that includes that license, plus you're selling bandwidth and all sorts of stuff in there as well.
That's right. Yeah.
Okay. Excellent.
Correct. In terms of the company, we've been, as you can tell, we've been pretty busy. We acquired an IT service company last year. We did that for some additional bandwidth and technical capabilities. We did a couple of financings last summer, one debt, one equity, roughly the same amount, about 1.9 million each. That was sort of precursor and funding for our Go Public runway. We attended Mobile World Congress twice. We did it at the end of 2021 as well as the beginning of 2022. The Mobile World Congress in 2022 was in Barcelona. We were there at the invitation of IBM and Red Hat and had some really amazing success there. We have signed a number of major deals over the last 12 months, but most notably, we signed a deal, which I'm not going to say the name because I can't remember if we press released it yet or not. I apologize, but in the largest fiber provider in South America, and we announced a Southeast Asian telecom, whom we haven't announced the name of, that we signed more recently. And then we completed our Go Public financing and $3.3 million in equity. And actually, at the same time we did that, we converted an earlier bridge that was put in December that was originally part of that Go Public, but just due to timing, they put some money in early. And so we really completed about $4.3 million in total financing.
Okay, so you've just raised 4.3 million going public.
Yeah.
Okay.
Yeah, essentially. Yeah, I mean, the actual Go Public was 3.3 and then a conversion, but yes. Yeah.
All right.
4.3 million. I'm not going to really go through the comparable analysis stuff here. This was something that we've had in the deck for a while, and sometimes the number crunchers like to go through it. It really just lets us talk about, we're obviously not a direct comparison to Cisco or VMware or Fortinet. I get that. We're not a multi-billion-dollar enterprise, but it does actually bear recognition, because when you look at our EV ratios and things, we're actually in line with some of the better performers. So it's actually quite interesting. Also, we like to talk about some of the acquisitions in the space. We talk about, what's our business worth and what are others worth in the space. And you think, 2017 VMware picked up VeloCloud for $450 million. At the time, they had well over $100 million of debt on the balance sheet, and they were burning 25 million a quarter kind of thing. Like it was an acquisition to protect market share. Cisco did the same thing with Viptela, Hewlett Packard with Silver Peak. You got Citrix's acquisition by Vista. There's a lot of movement in the space, and really the neat thing about it is these guys are protecting walled gardens. These are all hardware vendors that are buying software and technology stacks to try to maintain market share. And we're decoupled from all of that. We're completely independent. We work on a bunch of this hardware, and we compete directly with this stuff. So it's really easy for us to look at these things and go, yeah, okay, that's great, but we can do this. Can you? And the answer is usually no.
And with these huge competitors, do they go out there and try to sell their SD-WAN like, hey, we've got this solution? Or is it more, you got to buy sort of the Cisco bundle, and if you're not interested in the Cisco bundle, then it doesn't really kind of make sense. So in a sense, you're almost in kind of different markets.
Yeah, I mean, we're definitely different markets, right? Let's be really clear. We focus more on the down market side because, frankly, going head to head with Cisco is quite foolish from my perspective, because there's no way I can match their marketing budgets and whatever else, right? I mean, that doesn't mean we don't beat Cisco or VMware out of deals all the time. We do, but we don't do it on purpose. We just do it because it happens. You know, for us, we really look at how we as a business can differentiate ourselves and be disaggregated and be a more appropriate fit and a more appropriate use of technology to deliver a solution to a customer. And we feel that that better ingratiates us to our vendor partners and to their customers.
All right.
In terms of financials, as you can imagine, we are ramping things up, which means we're spending more money. You know, in the last couple of quarters, we have moved well into a burning mode as we accelerate our growth. This is normal. This is expected. This is part of a plan. Going public was, for somebody who's never gone public before, that's me, eye-opening in terms of the level of expense. 7 figures easily to go public. Fortunately, the first digit's a 1, but I mean, very, very expensive process. But what it does allow us to do is look at ourselves as a currency going forward as we look for a lot of our go forward sort of growth activities. I wanted to touch on as well, when we were talking about this slide and these guys, one thing that I didn't mention really or highlight enough, I think, is our relationship with Red Hat and IBM. We are the only SD-WAN platform that is certified for OpenShift and OpenStack with Red Hat and IBM.
John,
so what that means, yeah.
Sorry, could you go back a few slides where you've got the IBM Red Hat there, just so we can kind of visualize that a bit? Because I did actually want to, like, I was going to circle back to this as well. You're talking about IBM and Red Hat. IBM owns Red Hat, right?
That's right. Yeah, $32 billion acquisition, I think.
Yeah, I think that was IBM's biggest one ever.
Yeah, that's right.
Anyway, so go back now that we sort of have the visualization here. So how do you partner, or what does IBM and Red Hat and then Intel and Lanner do for you? Or how do you?
So about 36 months ago, through a really odd conversation over a beer with our strategic partnership operator, the Red Hat guys said to him, "We've got a really big problem. We're doing this demo at Kubicon, which is a massive industry trade show, and they were doing their virtual central office demo. And they said, we can't build the network." And he looked at him and said, "What do you mean you can't build a network? You're Red Hat, you're IBM. Like, how is that not happening?" They said, "We've got to run a virtual network from France to Montreal to Chicago to the trade show in San Diego." And we went to VMware, VeloCloud, and they told us no. And then we went to Cisco and Viptela and told them what we wanted, and they told us no. They said, "Give us 6 months, give us a bunch of engineering money, and we'll figure something out for you." And I don't know what I'm going to do. And Sandy basically throws his hands up and goes, "Oh, we can do that." And then he called me after this and he said, "I might have just stuck my foot in my mouth, or I might have just done something really cool. I told them we could do this." And I said, "You got lucky, we can do that." And so within 72 hours, we had a proof of concept running for Red Hat, and they were beside themselves. They're like, "How are you delivering this network?" And it's like, "Well, this is just what we're designed to do." And as a result of that sort of initial interaction and then doing Kubicon, Red Hat have invested well over $500,000 of their money into us, into certifying our products for use on OpenShift and OpenStack. And so we're the only certified vendor to run on OpenShift and OpenStack in the SD-WAN space. And so when we came to Barcelona for Mobile World Congress this year, we were featured heavily in a number of the IBM and Red Hat demos as the transport layer in their, for example, CP4NA product stack, which is Cloud Pak for Network Automation. It's one of the IBM sort of marquee products they're pushing right now. And so, you know, we've invested our time, energy, resources into building those certifications and getting those relationships going. And now we're starting to see instances where IBM and Red Hat are taking us into large scale opportunities. There's one we're working on with them right now that's 10,000 sites. There's another one that's about 15,000 sites. Another one's 1,000 sites. And they're basically saying, well, this is the SD-WAN solution we will use in your service delivery. So, those are not inked deals yet. I'm not saying, I can't say anything about them other than we're working on them, and, we'll move those down the sales pipeline. Also take with a grain of salt that these are massive, massive companies we're working with, and they don't move at the same speed Turnium can move and its level of agility when servicing smaller customers. We onboarded an entire telco who needed an SD-WAN solution in under 3 weeks last December because they had, a project they had to get done, and they came to us literally cold to fully up and running in 3 weeks. And that's into an OEM, white label type relationship. So we can move fast when we need to, but we are also at the mercy a little bit of our large partners when we're in those sales opportunities. Fortunately, our current primary sales objectives are really channel partner focused. So we're really looking to enable our IT MSP, VAR, and service provider channel partners, because frankly, they're a much faster path to revenue, right? I mean, those partners are selling new circuits and new systems every day. And those are the partners, that we can sell alongside with or through to deliver services right now. And that works really, really well for us.
When you mentioned OpenShift and OpenStack, I don't want to get into, but those are basically solutions that IBM and Red Hat are selling, and you're part of their technology platform that helps make it work. So they're not so much a reseller, you're like the engine in their car that they're selling, or whatever bad metaphor.
Yeah, that's right. We're part of the solution matrix that delivers the solution as a total or as a whole, right? Yeah. Without us, they might have another way, depends on the instance.
Yeah.
They might have another way to do that connectivity. They might not, depending on what you're trying to do.
Yeah.
So
your salespeople probably aren't so involved in it, but your engineers are, as you make sure your system is fully integrated and you do some technical sales and so forth, but they're trying to sell this solution, and presumably you're a part of it when they sell that.
That's right. We're available for demos, pre-sales and post-sales support, integration support, that kind of thing. We as a small company need to be very conscious that we don't get sucked in and inadvertently crushed by a behemoth, right? I mean, if left to their own devices, IBM or Red Hat would have 100% of my team doing nothing but supporting their initiatives, with no concept of what it would take for us to actually pay our bills, right? Yeah. So if they were successful and they were selling, like, that's great. And when they don't, they just use us as a sales resource, then we're toast, right? So we obviously have to govern that and make sure that we sort of exercise prudence and caution to balance our initiatives so that we as a business are growing. I mean, looking at these financials, like, they're reasonable. There's nothing really particularly alarming or offside, but we expect to be cash flow positive in the next 2 quarters, right? Like, we're not far from being in a really, really great financial shape. And that's what we're really looking to promote. And the way to do that is a balanced approach where we work equally with these major behemoths and our small partners alike, who frankly are more immediate cash.
All right. You meant, like, just going back, since we're on the slide here, you mentioned the high cost of going public. In the 3 month as a private company, and in March, you had 1.25 of loss before other income. I presume in there is a whole lot of going public expenses, so that's not sort of a true operation.
Yeah, I mean, that's essentially 3/4 or more of go public, audit, legal expense. Yeah.
Okay. All right.
Yeah, it's an unusual quarter for sure.
Okay. So so you've got your business, and then you've also got your reseller business that you acquired last year. I can't remember when.
Tenacious Networks, the IT service provider?
Yeah, the IT service provider.
Correct.
And so of your revenues, how much is coming off the SD-WAN, that's 92% margin SD-WAN stuff versus?
Yeah, so these numbers, just write this out here. So It's about 65% is the SD-WAN business,
Okay.
and 35% is the IT services business. The IT services business is healthy. Don't get me wrong; it makes probably a 15% margin or EBITDA. But it is a labor-based business. You're trading time for money, and you're selling hardware in there, right?
Yeah.
Which is generally speaking a fairly low margin game.
Yeah, but that facilitates the rest of your infrastructure and business and helps you, I presume, grows the knowledge base within the org.
It really does. It's kind of like, well, I mean, as anybody that sort of thinks about it would understand, I think. I mean, it allows you to have a profitable support department.
Yeah.
Right. Rather than just a cost base. Most service providers that sell an SD-WAN solution, they just hire a bunch of support engineers and they're just a sunk cost. Right. They are not looking to bill anything. They're just looking to be a support line item in a cost structure. Our support people actually make money and support our people at the same time.
Gotcha. All right. Okay.
Perfect. In terms of capitalization, this has been fairly widely reported in the last little while, obviously, as we've just gone public. But there's 85 million shares in total, including the stock options and warrants. Enterprise value is around $40 million at list. We'll have obviously some good stuff going on. We've also got the pretty standard, hey, you're public now, we're gonna shake out some loose paper kind of activity. So that's all pretty common. One thing we have done is we have escrowed quite a bit of the paper. We have a number of fairly long-standing investors that have some fairly low cost bases, and so we wanted to protect the market, make sure that nobody was doing anything untoward. So 63% of our issued and outstanding is escrowed, which I think is it's just prudent. It's just responsible management.
I just got a comment, your escrow upside down pyramid chart there. That's excellent. I wish every company would post a chart like that. That's very handy. Can you just, the going public transaction, what was the, there was a share in it was a unit deal. Could you just the pricing of it and just go over that quickly?
Yep, it was a 56 cent share and a 75-cent half warrant, valid for 24 months.
All right.
Yeah.
Excellent.
Perfect. That's basically it, other than any kind of questions or anything else I can answer for you, Martin.
All right, great. I was wondering, you connect up the different branch offices and so forth. Do you have any relevance from over the last 2 COVID years of the work from home where you've got personalized, does that is there use for you in the work from home model, or is that an opportunity or a threat, or just a bit of?
No, yeah, we definitely have a role there. We ourselves on our lit services side or the managed services side didn't elected not to put a work from home model together, not for any particular reason other than our partners were doing a really good job of it themselves. So we absolutely have partners that have taken our technology, come to us and said, hey, we really want to help client X, client Y, client Z with a work from home telecommuter solution. Can we have special pricing on the licensing to enable this sort of thing? And we said yes, of course, no problem. So we put together special SKUs and bundles for those customers to be able to use low cost, really low cost hardware, so that customers can have a secure work from home environment. That being said, part of our technology roadmap has addressed a number of those things directly within our software going forward. We are working on a number of new technologies and solutions to, I guess, complement what is now going to be a persistent hybrid workforce, I'd say. As much as I personally would love it if everybody was back in the office, because I like working that way, it's not going to happen, right? Let's just be realistic. And so we have a number of new technologies and solutions coming out that will address that and allow the IT managers and operators of these systems to have a hybrid workforce directly integrated to the SD-WAN solution, for sure.
Okay, so then they can worry less about sort of me clicking on a bad link at home and just having nice safe connection to the office.
Yeah, that's right. We'll have some news in the next coming weeks around some cybersecurity and some other features that we partnered with to add to the product mix. While I really value being a disaggregated solution provider, because I think people have the right to choose, they really do. I also recognize the need for tight integration to certain solutions and services so that there aren't cracks. And so we've gone and addressed some of that in some of our upcoming releases.
All right. Let's go to some audience questions here. Why do you think you have the best solution out there, and why a competitor could not improve upon it?
Well, I guess I would say a competitor could improve upon it. We all improve upon each other's solutions. That's just kind of how software iteration works. Having said that, I think that Turnium and its predecessor entities have always taken a different approach to deliver its solutions in the SD-WAN space. And what I mean by that is the way we built our technology for years. When we were out pitching the company to raise money, I get asked every time, do you guys have a patent? And the answer is no, we don't. We don't because we do our tunneling technology differently than others. And because we do it so differently than others, to do a patent would require me to divulge how we do that. And I wasn't prepared to do that because then all somebody has to do is look at how we did it, alter their work just enough to not conflict with our art. And then they have the technology, they have the how-to. I just don't want to play that game. And so we've been very successful for many years protecting our technology that way and growing that way. Having said that, what our competitors do is they really give us a benchmark to achieve and exceed. And I thank them for that, right? I mean, I always want my teams growing and doing the best they can do, whether it's the user interface, whether it's the tunnel technology, whether it's third-party add-ons, cybersecurity, integrated controls, whatever. We always want to be doing whatever we can to deliver better solutions. So I hope that answers the question reasonably.
And from me, my perspective, I always view like you're a pure play. All you do is care about SD-WAN. Cisco, the SD-WAN is one tiny little piece of their business. And it may be, like you said, being used to serve other masters. Okay, we're trying to configure it so we can sell more hardware, not necessarily like the last thing, whoever's in charge of SD-WAN, if he goes to his boss and say, I've created this solution that's going to kill, that saves our clients a bunch of money and kills a lot of our hardware sales, he's probably not going to get that promotion.
Yeah, I mean, certainly Cisco's purchasing of Viptela and Meraki to some extent. Cisco have tried SD-WAN 4 times, right? So they have something called IWAN, which was their on-built, what's called ISR platform-based SD-WAN solution. Didn't work very well. They've got Viptela, they've got Meraki, and they've got one other. Sorry, the name escapes me. And so they are protecting their hardware business. And, a lot of major telcos, like the big telcos, think TELUS, think Rogers, think Bell, they're essentially being given Viptela, right? Like, I mean, yes, they're going to have to pay for licenses of it at some stage of the game or what have you, but Cisco's doing that to maintain their market share within those massive telcos, because that's how Cisco remains dominant in the networking space globally. A technology like ours is so disruptive to that whole ecosystem that they really don't want to pay us much attention, because if they do, they start acknowledging that we might actually be something that others should pay attention to, right? So it's an interesting game that's being played for sure.
And software is in a continual kind of arms race. You're never going to win it or sort of get your FDA approved drug that you can sell. You're always improving, and if you don't, you're going to fall behind. That's
right. Yeah, I mean, the SD-WAN world right now, there's an effective cap on SD-WAN throughput. So, we think of networks and SD-WAN and how fast can an SD-WAN go, and the functional cost-effective throughput cap that's somewhat universal and I put a giant star at the end of that, of course, but somewhat universal, is about 2 gigabits. Going over 2 gigabits with SD-WAN is going to be cost prohibitive or very expensive hardware or have a bunch of caveats and limitations. I mean, it's just tricky to do. And that's quite common across pretty much all SD-WAN providers. And it's going to be really interesting when a vendor manages to break the cost barrier delta and can go significantly faster than 2 gigabits on a cost-effective platform and can scale. When that occurs, there's going to be a big, big shift in the industry and who's playing with what to catch up. Cost-effective hardware, in my mind, is a $250 to $400 piece of end-user hardware that goes at an office. That obviously doesn't account for home users, right? We'd like to see a $50 to $100 piece of hardware for home users or just a software client. But in that office class, if you could have a piece of hardware for $400 US that did 5 gigabits or 8 gigabits, you'd be in a very special place.
Right now, if companies need that, they buy like multiple machines and just sort of duplicate it and then have new pipes
with the
going
cost,
in? Or?
Sort of. With the cost delta that exists right now, really what it comes down to is the cost of SD-WAN north of 2 gigabits, let's just say, is the same cost or maybe even more in some instances as just getting a 5 gigabit fiber connection with MPLS, right? Like you're back to the old technology because you're into a place where that cost base makes sense.
Yeah.
Right. However, if you think about it, you can get a fiber connection at your home or your business that goes a gigabit for $200 any day of the week.
Yeah.
So if you have an SD-WAN solution that allows you to stack 5 of those, and you had a piece of hardware that could aggregate those 5 connections feasibly for a relatively low cost, you could have true multi-gigabit SD-WAN with carrier and path redundancy for far less money than a 5 gigabit MPLS connection, which is going to be at $8,000 a month kind of price tag.
So I'm guessing your engineers are working towards that. It sounds like a bit of a nice thing.
I'd say we're all working towards that.
There we go. All right. Next question.
Sure.
John, you are a very relatable and present very well. What is your marketing plan to bolster the stock?
It's a good question. I suppose I'm allowed to answer that. First, not to step in it, whatever it is.
Yeah.
I think the answer is we've just come out of the gates being public. We definitely want to educate the public. We definitely want to let anybody that is not interested in being part of our journey get their liquidity and make the changes that they need to make in their portfolios. And once we're comfortable that that's sort of had a little bit of time to occur, we're going to start on our mission to really grow the business. We have a number of very significant sales opportunities that we expect to bring in the next foreseeable future. We also have some M&A activity that we'll be talking about in the relatively near future. We have a plan, and I have been read the Riot Act that I'm not to overly disclose the plan for fear of causing myself all kinds of grief. So while I appreciate the question, I think I've said all I can. And Bill Matulis, who's our investor relations person, can definitely answer more of those questions directly, and will certainly get me involved where and when I can answer those.
Gotcha. I'm glad you mentioned the M&A side. So without obviously getting into specifics of who you're looking at and so forth. So that is part of the plan, obviously, as you've stated. Is that looking, and can you comment on, is that looking to sort of build out like, it sounds like most of your business is North American based, maybe to get some customer traction in other parts of the world? Are you looking for kind of key technology or a bit of both, or?
Well, let's address that actually. Turnium's revenue is pretty equally split between North America, Europe, and APAC.
Okay.
We were roughly a third. Through our partners, if you were to draw, if you put push pins in a map of the world of all of our, we'll call them the wholesale, right, white label partners, we cover about 75% of the populated planet. So if a customer came to us and said, I've got offices in all these locations, how can you help me? Our sales team would basically look at the partners in the regions and we put together a plan to help that customer. So we actually have quite a bit of reach. Some of our biggest partners actually are in Australia and the UK. So we do a lot of that. Having said that, absolutely the goal is to grow Turnium specific and Turnium branded presence in other regions. I mean, I think we have a relatively well-regarded brand in North America. We have a relatively well-regarded brand in other parts of the world in the wholesale space, but in the retail space, nobody would know we existed. And so obviously we're looking to change that. We just announced the major telco in Southeast Asia who have, I think 6 operating entities underneath it that are roughly the size of Rogers Communications, to give you an idea of scale. And we're their SD-WAN vendor now. So how this is going to go and where it's going to go, I mean, that thing is so huge, I can't even guess, right? I mean, I just know it's going to be significant. In terms of beyond that, it's really hard to say.
Gotcha. Here, next question is someone asking for a little more arm waving from you. As a business, what could Turnium look like in 5 to 10 years? And what key metrics should we watch to know that you are executing? And you know what? I'll throw in the next question, which kind of relates. How quickly could you get to unicorn status? So I don't know if that falls into the 5-10 year plan,
Yeah,
but there's a minefield for you and your compliance guys to tiptoe through.
Yeah, thanks so much. So the next 5 to 10 years, as everybody in the tech space knows, 5 years is an incredibly long time. Like that's 15 years in normal business terms, right? I mean, everything in tech is 3 times faster than everywhere else. So what do we look like in 5 years? Assuming Turnium hasn't been taken out in the next 5 years, and that by itself is a huge question mark. Assuming we're still a business, I'd say we're a $1 billion plus business quite easily in that time frame. If we actually are given the runway, and by that I mean there isn't a takeout bid that's successful, but our runway to actually execute on the business will be, I think, into the 100+ million revenue run rate 24 to 36 months from now. We've got a number of acquisitions that are pending. We have some massive sales opportunities that are pending. We have to execute, right? The question was, what key metrics should you look at? You should watch our monthly and annual recurring revenue continue to grow. You should watch things like setup fees are a very good indication that a major deal has been signed. So one-time revenue. We do not typically operate on a one-time revenue basis. So if you ever see it on the balance sheet, it's because something big happened, right? It's not common for us, other than when we sign up a new major partner who has to pay, think of it like an initiation fee to get the technology and the plant services set up. So those are things that you could look for if you were looking at the balance sheet of Turnium. Be very careful when you're looking at that balance sheet that you're not looking at a subsidiary like Tenacious, who would have a very different balance sheet with very different numbers. So you want to make sure you're looking at the right balance sheet for that. But yeah.
Gotcha. And I don't want to give you some wiggle room. You're not forecasting that. You say that's a potential of if the stars align properly, you execute well, you get lucky, and everything goes well, really well.
You got it. Yeah. Yeah. I will do my level best not to run the car into a wall.
All right. And I guess in terms of news flow, because you're running through partners and you said, hey, look at the setup fees. I guess you're also indicating there if one of your partners signs up a big contract, you're not going to be able to press release that.
In a lot of cases, that's right. So where we're able to press release is typically where a partner's come to us and ask for special dispensation. So let's say a partner wants to sign a major deal where they need special pricing. We typically, in that instance, will negotiate the right to some form of news flow.
All right.
Yeah.
Okay. And maybe really big ones, you can say, hey, we announced an unnamed partner or client, but we can't say who or what it is, but
that's right. Or we can't say for now. I mean, you know, the reality is the Southeast Asian telco's name has not been announced for the simple fact that we were competing against every other major SD-WAN vendor in the world, and they don't like the fact that they're going to lose. They may not have been told yet. I don't know. So, you know.
All right. All right. Here's a question regarding, I guess, work from home.
Yeah, let me read the question. Yeah.
Okay.
So if I understand the question correctly, they have a central data center at their head office, and it has a single internet connection, and the work from home users are fine to connect through that. But in the event that that single connection goes down, all 400 work from home users go down. So I think the question is supposed to be, can SD-WAN make that internet connection at head office more reliable so that if one link goes down, the other stays up? If that's the question, the answer is yes, of course. If you had an SD-WAN solution on that head office link, you would run, let's just assume your first link is a gigabit fiber, you'd put another gigabit fiber from ideally a different provider coming in a different path, not using any of the same shared infrastructure, and plug it into the box. You could even run high availability SD-WAN appliances, so that literally one connection goes into box one connection goes into box two, the two boxes talk, and then they both come out to your core routers or switches, and everything is completely redundant. Yes, you can do that, and literally you'd have to lose power to both boxes, or both of your fiber lines would have to be simultaneously cut for your system to go down, and you'd lose access. So yeah, you could do that for sure.
One of your shareholders and longtime funders is a Victory Square, a private equity or venture capital group based out of Vancouver here. Do you have any other sort of VC backers or any other notable long-term investors from you guys?
Not particularly. VST or Victory Square Technologies are a company that we did some work with a few years ago, and they elected to put some money into an earlier round. Victory Square is not our parent company, if that's what somebody was asking there. Turnium is the parent company of Turnium, but Victory Square are a large in our scale, but not huge shareholder. I'm not sure that I'm allowed to say how much they hold, but it's in the single digits, so I can say that. Gotcha.
Yeah, and they don't hold directly a board seat, do they?
No, they do not. Nope, they're just an investor.
John, we are an hour into this, so I think that we really did a nice dive. You hit things very concisely. We've addressed this a bit, and just to wrap it up, what kind of news flow should investors be expecting through the back half of the year? Obviously, if you do an M&A, that could be like new product features. We discussed customer wins or resellers, that kind of a thing get announced.
In terms of news flow for us, we want to be as transparent and informative to the shareholders as we can be. We might issue more press releases than less. We'd like to keep our shareholders informed of what's going on. I think press releases are a really good way to do that. It lets them see what the company is doing and what it's working on. Certainly, we would announce large customers, major contract wins. We'll be talking about any sort of M&A or major licensing initiatives. Those are all things that would definitely show up.
All right. And hopefully we'll get you back on here in a little while to share some more information as the business progresses.
Super. That'd be great. Thanks, Martin.
John, thanks a lot for taking the time to talk with us today. All the best. Have a great summer.
Great. Thanks. Thank you, everyone.
Cheers.